So I've been running heaps of these seminars, and what I wanted to do was take you through some of the questions that I've been getting. We recorded the first lot a little while ago. You'll notice the yellow shirts. Well, I've got a pink shirt on today. So we've got about 25 questions to get through. And you can watch them. They'll be separate videos, so watch them each as you go along. But guys, any questions you've got from the webinars, or any questions you've got in general, if you email them through to me, just send them through to info@ypc-group.com. And what I'll do is I'll actually record a video response, so you get the answer in video as well as putting a blog together. Because one of the fundamentals of building a property portfolio is actually getting really good education. If you can do that, then you can confidently move forward. And that's really what this is all about. This is what this education series is about. It's why I'm in front of the video so often, is because I want to get that education out there. Okay, so this question's an interesting one. I get it quite often, actually. It's one of those ones that effectively what it is, it's that most of what I do is aimed at people with money. You know, what about the people that don't have the deposits and don't have the the money to invest, and they don't have the income, and they're sort of below a certain level of income, or that sort of stuff. Now, interestingly, they're exactly right. Okay, I'm a big believer that if you haven't got any money, if you haven't got any deposit, if you haven't got any savings, you shouldn't be investing in property. Okay, now that will probably pee some gurus off and some no money down, proponent people that are selling that sort of crap. But the fact is if you can't get the level of discipline to save at least the deposit, then you shouldn't be investing in property. Because the problem is, you might get a property, but you're now risking a lot and you risk losing it. Whereas if you put the disciplines in place up front around saving, around fiscal discipline, around your spending habits, all those sort of things, you'll get the deposit pretty easy. Actually, it's pretty easy to save a deposit. And I don't care who it is, I don't care what your situation is. The fact is, if you've got lots of debts and all that sort of stuff, you need to address what got you into those debts first before you start building a property portfolio. And don't believe for a second that there's no money down, that jumping into property and building these big portfolios with no money, that most of the gurus and that are telling you is the answer, because it's not. It's bloody risky. Excuse the French, if that's French. Okay? And for the most part, it's more about their commission than it is about getting you out of your situation. You want to get out of your situation where you don't have the deposit, you don't have the income, that sort of stuff, then what you need to do, okay, is fiscal discipline, savings. And look, the start of that is you read a book called The Richest Man in Babylon. Go onto Amazon, buy it. It's one of the best books ever written about this base level of fiscal discipline. And if you haven't done it yet, get your kids to read it. It's a great story. You read it in one sitting. It's not very long, but the principles in there, and make no mistake, these things that I'm talking to you about, and this is what I'm telling you about now, this is exactly what I've done in my life. I've read that book, I would say, over 100 times. Whenever I get to the point where I'm ready to break through to the next level and I'm ready to take my finances to the next level, I go back and read that book. And sometimes I even read it twice. I've got a copy of my book where I've actually got scratches in it every single time that I've read it. The cover's half torn off, it's ear dog marked, whatever. It's got crap everywhere. But the fact is that really, for me, is my base level of education around fiscal discipline, around how to save. So if you haven't been doing that and you're struggling to read that book. And I'll tell you, if that doesn't change the way you think about things, then come and see me and I'll sit down with you and we'll map out a plan. Because look, whilst I don't deal with people, and as a business and as a company, YPC Group has the criteria, for a UK investor, minimum 25k income, minimum 25k investment or investable assets or available equity, or whatever you want to call it, and clean credit. If you don't have that, then as a company, we can't work with you, okay? That's a company decision, that's what I've made. So yes, if you don't have money, no, we can't. And I'm aiming most of my education at people who've got that level, okay? Because if you haven't got that level, then you shouldn't be investing in property just yet. What you should be doing is going back and looking at why you're not at that level, okay? Fiscal discipline, savings, all that sort of stuff. And then addressing those issues there, because when you solve those issues, then very quickly you'll get the deposit to start investing in property, and then you can move from there, okay? So that's why everything is aimed at people with money. If you want to go and play the no money down game, it's AKA Russian roulette, then go and do that, But all I'd say is, make sure you do your due diligence, check everything, question everything. Don't listen to a single thing any salesperson says to you. Check it out, double check it, triple check it. because I think you'll find most of the cases with those no money down, there's a reason why they're trying to structure them no money down, and that's because the property at its core is not really the sort of thing that you want to invest in. Okay guys, have a great day, and remember, live with passion.